Take a deep breath and imagine you're sitting in a quiet classroom. You're not here to learn how to get rich fast. You're here to learn how to become a calm, disciplined, intelligent investor. Today, I'm sharing wisdom from one of the most powerful books in finance, The Intelligent Investor by Benjamin Graham, with modern reflections explained for today's world. Let's begin. Part 1. What makes someone an intelligent investor? Listen carefully. An intelligent investor is not the person who predicts the next big stock, not the one who chases trends, not the one glued to market news. An intelligent investor is someone who controls emotion, thinks long-term, and follows a disciplined strategy. Graham explains that there are two kinds of investors. One, the defensive investor, calm, patient, focused on safety. And two, the enterprising investor, curious, analytical, and willing to do research. Both can succeed. But failure happens when people choose a strategy that doesn't match their temperament. So the first lesson for you is this: know yourself before you choose your investment style. Part 2. The story of Mr. Market. Now imagine you have a business partner. His name is Mr. Market. Every day he knocks on your door. Some days he is excited and offers to buy your shares at extremely high prices. Other days he is fearful and sells everything cheaply, almost in panic. Most people follow his mood. They become greedy when he is greedy and fearful when he is fearful. But the intelligent investor does something different. He waits, he observes, he acts only when the price makes sense. In real life, Mr. Market appears as hype on social media, panic news headlines, sudden market crashes, emotional buying and selling. Remember this: your job is not to react to Mr. Market. Your job is to take advantage of his mood with patience. Part 3. The margin of safety. Graham calls this the golden rule of investing, margin of safety. It means buy a strong business for less than what it is truly worth. So even if the future is uncertain, you still have protection. Like buying a $1 business for 60 cents. It's not about luck, it's about protection. It is how intelligent investors survive market crashes, economic uncertainty, temporary declines. Margin of safety is not about timing the market. It is about refusing to overpay. Part 4. The defensive investor. The defensive investor values peace of mind, slow and steady growth, low stress. They prefer diversified index funds, strong established companies, a balanced approach with minimal risk. This investor is not lazy, they are realistic. They know they don't want to watch charts all day or study financial statements every night. Their power is discipline. They don't chase trends, they don't gamble, they stay consistent. And over time, they quietly build wealth. Part 5. The enterprising investor. The enterprising investor is different. They are curious, analytical, patient. They search for undervalued companies, temporarily ignored businesses, opportunities others overlook. They don't follow hype. They wait for the right price. They study deeply, and they act with conviction. But Graham gives a strong warning. If you cannot commit time, patience, and emotional control, do not pretend to be an enterprising investor, because speculation disguised as investing is one of the greatest traps in the market. Part 6. Investing versus speculation. Speculation is when people buy because price is rising, follow rumors, chase hype, act from fear and greed. Investing is when you study the business, understand earnings and value, buy with margin of safety, and hold with discipline. Speculation is not evil, but it becomes dangerous when people think they are investing while they are actually gambling. The intelligent investor knows which game he is playing. Part 7. Emotion is the real challenge. Most investors don't fail because the stock market is unfair. They fail because they panic during downturns. They become greedy in bull runs. They react instead of thinking. Intelligent investors stay calm. When markets crash, they don't panic. When markets rise, they don't lose control. They trust their research, their strategy, their patience. And over years, not days, their discipline becomes their greatest advantage. Final message: the true spirit of the intelligent investor. This book is not about getting rich quickly. It is about becoming wiser, calmer, emotionally stronger. It teaches that wealth grows through patience, protection matters more than excitement, and true success comes from avoiding big mistakes. You don't need to win every year. You simply need to not destroy your capital. That is the essence of an intelligent investor.